Hey everybody, this is your host Matt Castellini and welcome to Chicago Capital. Justin, thank you so much for joining us on Chicago Capital. It is a true pleasure to have you on the show.
Thanks, man. Yeah, I was excited you reached out, and I've been looking forward to doing this. I was even, as you said, I even showed up early. So I've been pretty
You
excited.
showed up early. That is one of the first people to show up early. I love it. I love the commitment, and I think it's a great trend that I hope continues in future interviews. Just to get there, get in the green room a little early. Rehearse a few things. I think it's great. So I have to ask Justin right off the bat. I think you're one of the first guests I've had that has spent meaningful time in the great city of New Orleans, where I believe you spent your undergrad years. I think there's a lot of differences between Chicago and New Orleans, but it's a city that I absolutely love. So I just love to hear what was that experience like going through college in the Big Easy.
Yeah, it was amazing. New Orleans is sort of, I would say, one of the few unique cities in the United States. So when I went down there to look at school to pick out my colleges, we walked around. Guard District is amazing, all that kind of stuff. But sort of the funny story is, my dad and I wandered down to Bourbon Street to check it out, and I remember him turning to me and saying, "Whatever you do, don't tell your mom about this." It's a great place. No, it was a wonderful place to go to school. As you know, I was able to play college golf there, and the temperature and climate and all that was amazing. And it was a great place, great food. I really enjoyed my time there. I'm a kid from the Midwest, so it was a good culture shock to live in the South for a while.
I've always said to people, my sister went to school there as well, and I've told people it's a city that when you're in it, you feel like you're not in the U.S. You really do feel like you're transported to some, I don't even know how to describe it. It feels more European than it does feel, American, but it's incredible. It's such a unique culture. It's such a unique place. And I would love to touch on your golf career. I think, again, one of the only few professional athletes I've had on the show. How did that sort of how did that golf career transition you into your professional career? How long did you play professionally? How often do you still play today? What's your golf game like? I need to hear all of it.
So I was, as I mentioned, I played college golf at Tulane, and it's somewhere during sort of the middle of school or so, I thought, maybe I had a legitimate chance at playing professionally. So I, sort of mentally prepared for that. I actually ended up redshirting in the middle of my college years so that I could have a little extra time. I ended up going to Tulane for 5 years. So my last year of school, I ended up with just a couple of classes. So I was able to practice and prepare. So it was something that kind of progressed during school. And I obviously wanted to give it a shot. So I did that right after school. I didn't end up playing for that long. I did go through PGA Tour qualifying school, did not get my PGA Tour card at the time, but played a number of smaller tours for a couple of years. And I mean, phenomenal experience. I'm glad I did it. It's definitely a grind. It's not very sexy at that level when you're, just kind of humping it from city to city and, trying to make a few bucks to get on to the next event. But it was still a wonderful experience. I'm glad I did it. It was the first time in my life that I'd ever quit anything when I stopped playing. So I retired at 25, which is a funny concept to retire from something at 25, but, still enjoyed the experience. And then, after that, I ended up doing a bunch of different things, but I kind of knew when I ended up my golf that I didn't want to be in the golf business, sort of in the pro shop and that kind of golf experience. It wasn't something that I was interested in doing. So I ended up actually, I was a finance and accounting undergrad major. I ended up actually moving into trading after that and was a global macro trader for a number of years in New York and then in Chicago before I ended up progressing on to business school. And that actually, I talked before, that actually led into my short stint as an entrepreneur as well in that same particular space. But yeah, so it was pretty interesting from golf all the way, at least getting me up to Chicago Booth. And then once I kind of progressed into school, I knew that I was going to shut the business down. I was looking to, get some more technical skills on the finance side. And then it was after that I made the progression into strategy and then eventually venture capital.
I think one area of your career that's really fascinating, I think the trading part, I'm curious if you found that the fact that you were dealing with essentially managing risk every single day as a trader, Do you feel like that sort of pressure on a day-to-day basis helped prepare you for a career in venture, or helped you analyze risk from that standpoint?
Yeah, I mean, it is, while it's a difficult profession, it strangely prepares you for a lot of different things. And for me on the venture capital side, being a professional athlete, the understanding risk at that level, certainly the risk of trading, having to make those literal trade-offs every day, and the work I did in strategy and the time in entrepreneurship kind of all led me into venture capital. But certainly on the trading side, I think what's interesting is, yes, you get comfortable taking risk on a day-to-day basis. What I find interesting and more comforting on the venture side is that you have a lot more control over what's going on. I mean, when you're trading, I was in government treasuries and currencies and a lot of different stuff. I mean, the markets just tend to move, and they can move on top of you or they can move with you. And in the venture space, I mean, there's tailwinds and headwinds, but the management of the company does have the ability to make decisions. We're going to sell this market, or we're not going to sell to this market. And so while it is certainly risk, it's a little slower to progress, and it does feel like you have a bit more control over what's going on, which is great.
Did you get introduced to venture capital during your time at Booth? Was that sort of your first real, experience with taking classes and getting to understand the industry? Or when did you sort of have the light bulb moment where you realized, I really actually think venture capital is a career path that I want to pursue?
Yeah, so I'd say there was a couple of moments. So as I was going into Booth, I was an entrepreneur, so I was kind of sort of familiar with what was going on, although I didn't have to go through a bunch of periods of raising capital. But when I got into school, also I did some traditional internships. I actually worked for another startup and kind of got to get some experience on that side, and so I got to get some exposure. But at school, certainly I learned about venture capital and what was possible there. The funny thing about that is I had the realization that it was nearly impossible to break into. So I really didn't pursue it while I was at school. I mean, it's like it sounded fascinating, and it really kind of fit with my, we'll call it, perpetual intellectual curiosity. But just looking around and thinking, I mean, how in the world do you break into this? Just at that time, I just, so I, coming out of school, I ended up moving into strategy after that. And it was my time at the Chicago Mercantile Exchange when a position opened up in corporate venture capital. And I thought, here's the opportunity. Here's legitimate. This isn't like me going out to the entire world and trying to find somebody to, let me in. This was, I had experience, and I was going to be immediately impactful in this. And so, I just hustled literally as hard as I could to get that job and that position. And, I knew it was coming up. So I was, volunteering to help the group and, just doing whatever I could. And so that was more the light bulb moment. And it was when I started there that I, just fell in love. I mean, we were investing in a wide range of technologies, and you and I have talked separately about some of the interesting things that are going on in the deep tech space. But I mean, everything from quantum computing, all the way over to cybersecurity and everything in between. So our motto is really tech before it became fintech. So a lot of data related technologies, a lot of software. And for me, that was like, this is the thing I'm going to do forever. And so that was definitely the light bulb moment, and will sort of be forever grateful to CME for that opportunity to get started that way.
Would you say it's gotten easier for people from business school to break into VC over the past, 8 years? Or would you still say people are probably best going out and getting strategy experience, startup experience before trying to break in? I'm just curious about your perspective now, for people coming from B school, if they want to break into VC.
Yeah, I'd say maybe a little bit, just because there is more capital and there are more firms, and they're maybe a little more, regionally, each region is growing a bit, but it's still pretty darn tough. And people come with a lot of different experiences that come into it. I mean, you could have been an entrepreneur that was successful and now you're breaking into it. You could have been a banker in a particular area and you get your MBA and you do an internship. You could have worked in strategy, whatever it may be. So I don't know if it's gotten any easier, but it's maybe a little bit more available. I still think it's hard to break in. And I think anything you can do during those business school years, I know like Booth has the PEVC lab and stuff like that. And that's a great way because often that first venture job, you need just a tiny bit of experience, just so you know, like you've seen enough of the process to understand what's going on for someone to be comfortable to have you, added to the team and join the group. So whatever a person can do to just get a little bit of experience is the best starting point. And if you can't do that, then you're talking about more of like, hey, can I do some angel investing? Can I put myself out there in terms of thought pieces and that kind of stuff as well, just to show people that you're interested in a particular area and that you have some opinions.
So I'd love to talk about your transition to Alumni Ventures, which took place at the beginning of 2021. Would love to hear what attracted you to the opportunity and a little bit more about, the team you're building out and where exactly you fall in sort of the hierarchy of the big corporate sort of overhang that is Alumni Ventures.
Yeah, sure. Not too big in corporate, but we've got a wonderful support staff. So I would say for me, the initial attraction certainly was my connection and affinity to the University of Chicago network. So I'm a graduate. My wife is a graduate at Chicago Booth. My brother-in-law is also a graduate at Chicago Booth. So that extra sort of emotional kicker of being able to work around that community, because for the listeners, our mandate is to not only raise capital from University of Chicago alumni, but then go put that capital back into University of Chicago alumni businesses. So it really, certainly started with the excitement and curiosity around having that connection, and then knowing that it was something that I could build over hopefully the next 20 years or so, something I could really put my stamp on, because that could be hard to find. So it definitely started there. And then I started kind of peeling back the layers to understand Alumni Ventures and understand the model. And I got even more excited about it. I mean, the fact that we are basically providing portfolios and funds for individual accredited investors that can't really get exposure to venture in the way that we're doing it, I thought was amazing. And happy to be able to do that, because I think going back, for me before being in VC, my wife and I talking about like, well, how do we get exposure to venture? And there's some ways, but often you end up in one or two seed deals, and that's really not diversified. And it's you take on a lot of risk. You wonder, how did I get into that deal? Versus what we're putting together in terms of having investors get exposure to 20 to 30 companies in each fund, diversified across stage, sector, and geography. And then, for me on the personal level, I'd been a generalist technology investor in the past. I mean, I've done deals across a range of stages, kind of seed to Series D, done deals across the globe. And so Alumni Ventures, our model and our funds are, as I said, diversified across all of that. So for me, it was a nice fit too, in terms of my experience. And then also just to maybe like connect the dots between Alumni Ventures and Lakeshore Ventures is Alumni Ventures is the parent company. And that parent company consists of 18 other alumni funds. So I run the Lakeshore Ventures Fund, which is targeted at the University of Chicago community. We also have a Harvard fund, a Stanford fund, MIT fund, and run through all the Ivy Leagues as well. So that's kind of the parent to fund structure. And what that allows for me is that I've got, basically 50 other investment professionals at these other funds that I can, bounce ideas off, co-invest. And then at the parent company level, we've got about 100 support staff helping us in marketing, comms, legal, fundraising, all that good stuff. So it makes life much easier for me and allows me to focus more on the day-to-day, venture work of sourcing deals, executing on deals and managing the portfolio.
And I'd love to dive in first, I guess, to the fundraising aspect and the sort of value add, the pitch towards these accredited investors. Is part of this pitch, the model of Alumni Ventures being co-investors? Is there a sense there? Is there a pitch there about the type of deals that you can get into because that is the model? I'd love to kind of hear how you sort of have those conversations with your LPs.
Yeah, no, absolutely. And so I describe as whether it's to, LPs or potential LPs or to other investors or entrepreneurs as prolific co-investors. And so our model dictates that, we are focused on building diversified portfolios. And what that means is that, to be frank, you give up a little bit of time and a bit of control as opposed to taking board seats for every single deal. So we would end up with smaller portfolios, more individual control if we were trying to take a board seat of every company. So when we go in and do deals, our diligence weighs heavy on who the lead investor is. And so, we want to, co-invest with established VCs. And yes, I mean, I could run through all the names that between Alumni Ventures and Lakeshore Ventures, but it's all top names that of, established VCs. And maybe just like to give you a sort of a tangible example, we did a deal recently in the biotech and life sciences space, and the two lead investors, both 20-year track records for these venture firms that led it. You also had Sanofi Ventures. You also had T1D1, which is the largest diabetes fund. And then also the University of Chicago. The University of Chicago has a deep tech fund focused on a range of things that are coming from sort of the Series A and beyond that we end up co-investing with. So the model relies heavy on that lead investor and their quality. And then we do all of our normal diligence behind all of that. But yes, in terms of talking with investors, our pitch is certainly about what we're doing on the diversification side. And then it's also about how we get into deals, because we can flex up or down on check sizes, and that's non-threatening to the lead investors. And then entrepreneurs just really like our network. I mean, we've got 7,000 individual investors, 750 portfolio companies, and something like 500,000 community members. And they're all from, as you can imagine, strong schools and people that pretty much have done well in their career. So the entrepreneurs really like that part of it. And then the other value prop for the investors is, I think it's roughly a third of the investors in our funds will co-invest with us. So we'll often negotiate a bit of extra allocation in our deals, and we'll kick that out to our individual investors, and we call it syndications, but they get the opportunity to also invest in individual deals if they want. The entrepreneur only gets one check, so it's fine because the capital can go up. But some of our individual investors have areas that they know well or they want to participate in, and that gives them that opportunity to do that.
And speaking of the entrepreneurs, you mentioned the Duke Fund, the MIT Fund, you run the U Chicago Fund. Is there a mandate to invest, only in U Chicago alums, or do you have a broader, there's the idea of a certain amount of checks should go to U Chicago affiliated startups? How does that work in terms of the sort of outbound sourcing?
Yeah, and I try to make it a majority, and that's kind of where we are. There's no hard and fast rules or hard and fast numbers, and at the end of the day, we're trying to make money for our limited partners. I mean, that's the ultimate goal. But the best way to think about it really is kind of, how do you boil the ocean? I mean, we are looking at a lot of different stages, a lot of different sectors, and the way that we can get into deals, besides the fact that we've got a good reputation and done a lot of investments, is by using that community network. And so that it's really more of where do you start in terms of getting into the deals. And then I would love it if all of them had University of Chicago alumni connections. But that can be you could be a founder, could be a lead investor, could be advisor. So I do my best to find as many deals through the network as possible. But if there's things that are really good, and we have the opportunity to be in the deal, then we're willing to do those as well.
I guess zooming out a little bit, I mean, I think there's been a lot of shifts in the venture capital landscape in the past couple of years, and the success of Alumni Ventures, I think, speaks to this broader desire from investors to get access to venture capital. Are there any other kind of macro changes that you've seen in venture capital since you started out that you think are noteworthy? Any new models that are maybe similar to Alumni Ventures or different, or anything that you've noticed in the past couple of years that really you think reflect the nature of the market we're in?
Yeah, I don't know. I mean, these things ebb and flow quite a bit. I think you had a trend of companies, staying private for a long time, and you end up with later stage investors coming in, sort of the Fidelities of the world, and doing later rounds, and that feels like it's a bit of transition, and with the SPAC, market opening up, and we'll we'll see where that goes. But there has been demand and need and curiosity for exits. So meaning there's more, it seems like there's more going on in the secondary space, and that can provide opportunity, whether you're an investor or an individual, to potentially get access to some of these companies that were harder to get access to because of the long run on the private side. So I don't know if we're at a tipping point or not, but I think between some of the uptick in activity around secondaries and just entrepreneurs wanting liquidity and what's going on the SPAC side, is good. I mean, that's good for entrepreneurs to have more avenues for exits and liquidity, and it's good for investors as well. So that's probably the thing that would be top of mind for me.
I mean, I'm curious your thoughts as to this, but I see on VC Twitter all the time the debates that are waged. The Tiger Globals of the world, who are just quick, fast, easy checks and access to capital for founders, versus some of the more value add, some of the more must take board seats, must sort of very much be involved with the stewarding of the company. Do you think there has become this sort of evolution or diversification of founder needs and wants? So, some may want that more sort of handholding of a VC or the more, intensive VC experience. Others may just want sort of capital to kind of keep growing. Do you think VCs or entrepreneurs have sort of become smarter over the years, have become more narrow in exactly what their wants and needs are as time has gone on?
Yeah, and I smile a bit on this because I think most entrepreneurs, if they could tell you while looking away, would say, if they can have capital come in a frictionless manner, they wouldn't necessarily want to add people to their board. But I mean, there's a lot of amazing investors out there that do great work at the board level and provide expertise to companies, and they might not make it otherwise. But there is a fine line there. I would say, going back a bit on my own experience, less so than sort of the board versus not, and entrepreneurs on the capital side, is maybe the corporate venture versus traditional venture capital, where you've seen a pretty good uptick on the corporate venture side. And I think entrepreneurs were less inclined to take corporate venture money before. And now that corporate venture units have become more sophisticated, they're more inclined to take that because it is ready-made customers, it's subject matter experts. And I think that more so that has been a growth area than necessarily entrepreneurs saying, I want to have a mix of, more less involved, if that's how you want to phrase it, frictionless capital versus, on the board side of it. So I think that's more where you've seen entrepreneurs kind of become a little more savvy and a little more open because of what a corporate venture unit can bring.
Yeah, no, absolutely. Absolutely. I think I'd love to dig in a bit further into the due diligence process, both for you personally and for Alumni Ventures at large. So, I think for you, I'd love to hear kind of when you're analyzing a company or a new opportunity, what are some of the most important elements to you, or green flags? How do you sort of, rank order what's most important to you?
Yeah, so I also giggle a little bit in this question because I feel like if you asked 50 venture capitalists, it would all end up different answers, but the same thing effectively. So
Well, it makes for a great podcast
yeah,
question. You get tons of different answers, but it's
I
always very, very simple for the listener to understand.
I love it. No, I'll give you my thoughts, but so I would say, so we're just being humble about the whole thing. I think my questions are probably fairly similar to what other venture capitalists would ask. And so our model relies, as I mentioned before, relies kind of on the lead investor and their experience and their exposure to the space. And so we do a fair amount of diligence on the lead investor. And, because they're going to go on the board, and, you kind of want to understand, are they going to add value or destroy value, if you will, in the company? So a lot of our time is spent there. And I would say for other people that are either getting into venture or just like, having a mental model, what the University of Chicago puts out, or the business school puts out, that outside impacts framework, I think is great. I mean, it hits all the major stuff in terms of, asking about the strategy and the team and, valuations and all, market size and all that kind of stuff. So I still use that. I really like that model. And so I think that's a good one, for folks to use and look at as I think about just sort of the generic, questions that they're going to ask. Because then once you get in the data room, you kind of go deeper and deeper, and it kind of depends. Now, a long-winded answer, but the one of the big things that I learned earlier was to really understand a company's pricing model. So for me, that's important. There was a company that earlier days, that was in a particular space where transactions were important. And they ended up making a decision to go more of a subscription model. And I just, oh man, it almost made you cry because of they kind of missed on the opportunity of, they did a ton of transactions, big dollar amounts, and it really ended up being, subscription model did not maximize how much money they could make. So I really like to understand entrepreneurs' thinking process around the pricing model. And I've seen enough companies now that I really like hearing about it and their logic to understand how they're going to do it. And it is kind of funny as they start to cross over in different industries. But yeah, so that's for me. One is understanding that, and then otherwise people will fall asleep if we go deep on particular categories. But yeah. So that's my sort of long answer to your short question.
Once you've sort of vetted the company, you've vetted the lead investor, if I'm a potential Lakeshore Ventures, LP, and I'm listening to this podcast, I'm curious, what is the vetting process within Alumni Ventures? What's the IC process like? Would love to hear about sort of the inner workings to get, an investment to an
Yeah.
actual check.
Yeah, certainly. So, and I think each venture firm has its sort of own nuances of how they do it. And I think the more common structure for smaller firms is, you get a couple of general partners in the room, and it's, kind of thumbs up, thumbs down. Our process is fairly formulaic, and we describe it as we like to use the wisdom of the small crowd. So let's start with the assumption that diligence has been completed. We've put together our memo and our diligence memo, and then we're rounding up our investment committee. So then the process from there goes, me as the managing partner of Lakeshore, and then the members of my team, we will score the deal. We have something that I harken back to my negotiation class at Booth, which is turning the qualitative into quantitative. So we have particular categories that we look at. What's the lead investor, competition, et cetera, and we will score those. So I will go through that process. My team will go through the same process. We'll score the deal. Then another alumni fund will also do the same thing. They will also score the deal with their team. And then we will get together our investment committee. The entrepreneur will go to our investment committee, give their pitch. There's obviously the Q&A portion of it, and the entrepreneur leaves. And then the investment committee will be able to do the same thing. They will independently go off and score the deal as well. Then we look at the scores that have all come back together and make a decision on whether we're going to invest. We have certain thresholds that we need to get above in order to make an investment. And there's some other nuances in there in between where we have checks if we need to, go ask some questions or go back to the entrepreneur and ask questions. But yeah, our process is really about, that wisdom of that small crowd, everybody going in and scoring from a, independent position so that we get a sense of what everybody's thinking.
And it sounds like Lakeshore has already made investments this year, correct? And you've been making investments since the beginning of 2021?
Correct. Yeah. So we started not at the very beginning of 21, but yes, we have made investments this year. So we are up to 7 now. Not all of those are up on the website, so I can talk about a few of them. So they're not all public, but in the theme of diversification, as I've mentioned many times, we have companies in healthcare, as I mentioned, biotech. We did an investment in a company that's in space technology. We just did an investment in a company that's in the real estate space, and one that is in call it consumer goods. They're building out a 3D holographic display, and the hope is that with that wide viewing angle, that maybe someday you will be able to do away with goggles, and pretty interesting stuff on the gaming side as well. So yeah, so we are building that out, and we've got quite a few more companies to go.
How do you all ensure 750 portfolio companies, 20 to 30 checks a year, 18 micro funds? How do you all at Alumni Ventures ensure no conflicts of investments? I mean, how do you guys make sure that nothing overlaps with each other?
Yeah, there's a lot of different ways. So we make sure there's only so many alumni funds that can invest in one deal. So so not all 18 are going to go into one. It's a couple of funds that go into one. And then, investors can make decisions on whether they want to invest in a particular area category. We have, like a deep tech fund and a blockchain fund and a seed stage fund. And then obviously we have the alumni fund. So the investor can choose if they want to be in a particular category, as opposed to, the same, being in different alumni funds. So yeah, it's there are a lot of companies, but because we don't all invest in the same things and investors get a chance to choose, it ends up working out on the back end. We also have, we refer to the Office of Investments, and they look over all the deals, all the allocations before things that's like the final sign off on completion. So yeah, there's a watchful eye to make sure that we aren't running into each other.
And your process in the last year, you've been writing investments, and bringing new people into Lakeshore Ventures, but I would also imagine you've been fundraising as well, sort of actively fundraising. So just curious what it's been like fundraising in 2021. I feel like it's probably been a unique year to do so.
Yeah, it's a bit crazy. I will say, I mean, I want to first give a shout out to the senior partners that I work with, because one of the big things, because of the support staff we have, is that we have individuals at Alumni Ventures that's what they do is fundraising. So they focused on that, and I will certainly do fundraising calls and talk to potential LPs, and I love that because it's a lot of fun. Just connecting with people in the University of Chicago network. Everybody's got amazing experience in different categories, which is great and helpful for us. So that is a shared experience with our senior partners. But obviously, I'm doing it, as well. And the fundraising is going great. I mean, fundraising is fundraising. I mean, parts of it are a lot of fun, for all the reasons I mentioned. And then parts of it, every entrepreneur or VC will tell you, it's a bit of a grind too. So yeah, so it's going great. And I just enjoy the, getting to know people in the network and having that common connection.
And before we turn our attention a little bit more geographic specific to the Midwest and to Chicago, I'd love to hear you mention an interest in deep tech. So would just love to touch on if there's any particular areas within deep tech that really interest you, and where some of those passions really came from.
Yeah, and so the one thing about us building the portfolio is I can't over fall in love with a particular category. And the nice thing about deep tech is it's pretty broad. But there are certainly particular areas that I have been interested in over the years, and I really like. And I'll drop a bit to local, but I really like what's going on in the quantum computing space for Chicago. What the university is doing with their accelerator duality. I love that P33 is supporting that. Those folks really well, and so I love that the quantum computing effort is coalescing around Chicago, and it's more than just University of Chicago, because you've got a couple of federal labs and a couple other universities as well. So that's wonderful, and that's an area that even going back to CME when we did an investment in that space, I've always been interested in, whether it's hardware, software, even security. So I even just a couple of days ago, I got to meet a fascinating company in the quantum computing space that's here locally, and they're trying to solve a really hard problem, which is you have disparate hardware, the IBMs and Rigettis of the world, and whoever else is there, their different models. You have that which end users need to connect to, and then you have all the stuff that sits in the middle with the application developers at the very other end of the spectrum, who probably don't have experience, programming a quantum computer. So this company is basically building out what's called the middle part of that, so that you can hit disparate hardwares and you can still do your application development, and you don't have to be an expert at either one of those spectrums. So that's something I think has been needed. And in my little world of my little network of deep tech, there was like 3 different people that mentioned this company's name, and I was like, oh, I got to go talk to them. So I did, and I'm very excited, and hopefully that will be in our pipeline in the future. But yeah, that's one area that I'm excited about, passionate about, and it's got a long tail, but it's pretty cool.
Did you ever spend any time at all in your VC career just with your background in trading, looking at any fintech companies? Are you interested at all in crypto trading? Just curious how that time you spent in trading maybe still impacts your VC career, or did you just get out of financial services and you were like, okay, I'm going to leave that behind and focus on other things. That was enough trading
Yeah,
for me.
it was a little bit more of leaving it behind. Now, I mean, certainly it was kind of quirky because at CME, the intention was, and that would be the closest I'd been at that time for capital markets, technology, and fintech. But we were really intending to be tech before it became fintech. So as things were more in the trading technology side, we were less inclined to do it and more of kind of make internal introductions. So I've kind of found my passions in other areas. It's typically one that's easy for me to understand. And then there was one portfolio company, which I won't mention the name because I'm not sure how public it is what they were doing on that side, but they were going deep into the trading side of it and working with a hedge fund and trying to figure out some of the correlations as it related to markets and whether they could do certain things with their artificial intelligence. So yeah, I do like when something's more tangible on the application side as it relates to the markets. There's a funny thing that I've seen, and I'm I'm an expert in this area, but I see it when I talk to other people that are experts that have been in an area for a long time. Is often you build up a high bar of skepticism, and so you're almost less inclined to do something because you're like, here's all the ways it could go wrong and it couldn't work, and then entrepreneurs just go prove you wrong. So there's a bit of that for me when I look at some of the trading things, where I'm like, okay, here's why that's not practical or whatever, and then I just get proven wrong. So I'm a little bit careful on that side of things, but it is easy for me to understand technologies, generally speaking, that are in capital markets and for trading.
Yeah, for sure, for sure. I guess a question related to Chicago, but it sounds like we've touched on a little bit of the answer, but an ecosystem like Chicago in 10 years from now, do you think there are certain sectors or areas of technology that we're going to be known for? It sounds like quantum computing is one of them.
Yeah, absolutely. I hope that's the case. I mean, otherwise, we have a lot of different industries, and certainly, with CME being here and a lot of proprietary trading firms, there's reason to believe that what's going on in the trading side of the technology space. I think that's kind of already here, and that will grow. But I'd love if we could carve out our niche on that quantum computing side. I mean, you've got you know University of Chicago, Northwestern, U of I. You've got some great potential. UIC. You've got potential wonderful talent pool on the engineering side. So these folks don't have to leave the region to go other places. So I hope that that's the case, and that in the deep tech side of it, that people stay here and build their businesses. But I would say that's as good as any. I'm not super deep on the biotech and life sciences side, but also I think there's some groundswell there in terms of opportunity and capital. But for me, I'm sort of more a little bit closer to what's going on the quantum side. So I hope that's where we carve out the niche, and I think we've got a really good shot.
And you've been around the city of Chicago and the early stage ecosystem for a while now. I'm just curious, any kind of challenges that are unique to Chicago or challenges at large that you think Chicago may face with growing into a bona fide tech hub?
Yeah, and I think kind of rolling out of the Chicago Venture Summit here recently, I think I would say probably the same things as everybody else in terms of quantity of capital and the kind of talent flight that happens. So and you're seeing some bigger companies here. You see in the headlines and securing office space and having those big names here will help us hang around, but also success breeds success. So I don't remember the exact number, but we now have a number of unicorns that were, built, grown, birthed, however you want to phrase it, here in Chicago, and that will continue to attract more and more capital, going forward. So, I think we're on that right trajectory, and even like the stuff that Brad is doing over at P33, just really focused on the tech community, and he's great about. I mean, he's very commercially minded. So I think he will do a good job of making sure these are areas where legitimately, we think we can, be successful. So there's plenty of room to run. I mean, evaluations certainly are better here than they are on the coast. But I mean, I really think that, we're on a upward trajectory.
Once we get a new stadium for the Chicago Bears, the sky's the limit. I mean, seriously, I think that's the next major milestone we get, and then everything is just peaches from there.
That's all we need. It's problem solved.
Justin, I have one more question, most important question of the show. Favorite restaurants in Chicago, if you were to give any a shout out?
Oh, you know what? Let's go with an interesting one. So Going back a bunch of years ago, my wife and I did our wedding reception at Cortino's. So I'm going to give a shout out to Cortino's. It's been there for quite a long time, but I do love the spot.
I've never been to Cortino's, but it's the spot that like every single person when I ask them for favorite Italian spots, it always gets a shout out. So it's very high on my list. Justin, thank you so much for hopping on Chicago Capital. We really appreciate it. This has been a blast. Can't wait to talk soon again in the future.
Thanks, man. Appreciate it.